Finally, the debate concerning autogenous pressurization of SpaceX's rockets brings attention to even another level of engineering intricacy. By heating cryogenic liquid, this system produces hot gas, which pressurizes the fuel tanks. This procedure is vital because it has an impact on the fuel pump's power production, which is essential to the rocket's functioning. It's a clever approach that highlights the delicate engineering balancing act needed to effectively maintain and operate spacebound rockets. Every advancement in technology or enhancement of SpaceX's operations not only helps them advance in the aerospace sector, but also supports Tesla's reputation as a pioneer in sustainability and innovation within the automotive industry. The technological synergy across Musk's endeavors frequently results in mutually beneficial discoveries that drive both businesses towards higher standards of performance, strengthening their expansion and securing their dominant positions in the market. Modern technology is used by both of Musk's businesses to push the limits of what is practical in their respective industries. Tesla uses similar ideas to transform the automotive sector, much as SpaceX innovates in aircraft technology to guarantee safer, more effective space travel. A key component of SpaceX's strategy is its emphasis on improving designs, performance, and reliability. This approach is quite similar to Tesla's in the electric vehicle industry. Every model iteration and software update at Tesla is more than just an improvement. It's a methodical pursuit of perfection that increases productivity, user satisfaction, and vehicle longevity. Because of their unwavering commitment to quality, every Tesla vehicle that leaves the factory is a monument to cutting-edge innovation and sustainable technology. The innovation and collaboration between Tesla and SpaceX are essential. It not only helps each business progress in its own fields, but it also confirms its leadership positions in the worldwide movement towards cutting-edge technology and environmental sustainability. Both businesses make significant contributions to their industries and establish new standards for what is possible with technology by consistently pushing the envelope. This common culture paves the way for innumerable other sectors and businesses to follow suit and incorporate innovation, efficiency, and sustainability into their operations. Tesla is leading the way in industries like electric automobiles and energy solutions, much as SpaceX is improving rocket production and investigating novel technologies like electric actuation. Both businesses push the limits of their particular fields while also contributing to the larger goal of developing technology for a sustainable future. The continuous advancements and technological innovations in SpaceX support Musk's business's interconnected growth paths and indirectly strengthen Tesla's standing as a leader in innovation. Every step that SpaceX takes towards its lofty objectives advances both space travel and the inventive spirit that it shares with Tesla. What potential effects do you see for other businesses from SpaceX's technological achievements in space? What do you think SpaceX or Tesla will accomplish next that really big? Do you believe Tesla need to incorporate any particular SpaceX innovations into its cars? If you enjoyed our conversation today, don't forget to subscribe to Tesla Stock News and like this video for future updates and in-depth analysis regarding SpaceX and Tesla. We appreciate your time and we'll see you in our upcoming films. If there's anything else you want to change or concentrate on, please let me know. Perhaps in the next 3 to 5 years, define Tesla's future as well. As of right now, Model 2 is the main driver of growth and is predicted to account for 50% to 60% of further growth over the next 2 to 3 years. Autonomous driving and robot taxis are not anticipated for another 5 to 6 years. We have seen more than our fair share of nerve-wracking moments from Musk and Tesla in the past 10 years. This time frame is especially difficult. It's like a Cinderella tale that's abruptly transformed into a terrifying nightmare on Elm Street. Beginning on Tuesday of next week, Elon Musk needs to take back control of the story because, in the absence of an adult, there might be worse times ahead. As we examine 2 startling forecasts that provide the groundwork for a monumental change in both Tesla's future and the automobile industry, the future seems to be an exciting ride. First, we'll examine a startling prediction made by a renowned Wall Street analyst who was not only upbeat but also positive on Tesla, implying that the company's market capitalization may soon not only rebound but reach previously unheard of heights. After that, we'll discuss the excitement around Tesla's much-awaited robo-taxi event, which some have dubbed as maybe the most significant day in the company's illustrious history. This development might propel Tesla well beyond its present state of technological and commercial success. We'll examine the ramifications of these forecasts, break down the factors influencing this optimism, and assess the potential effects of these changes on the market and your investment plan. This episode is perfect for everyone who loves Tesla, is interested in investing, or is just amazed by how quickly automotive technology is developing. So grab a seat, press the like button, and if you haven't already, subscribe to Tesla Stock News. Let's explore these amazing advancements in the Tesla community and beyond. In a recent research, Morgan Stanley advised investors to incorporate additional ag-related industries into their Tesla value model, such as ag computation, energy storage, and maybe humanoid robots. It is remarkable how much emphasis is now being placed on ag. Wall Street heavyweight Dan Ives pointed out that the story behind Tesla is changing. It is unclear if analysts will continue to emphasize Tesla's car margins above all else or whether they will see the wider ramifications of the company's ag advancements. Dan Ives, managing director of Wedbush Securities, has joined us. Dan, there's a growing assumption that Tesla could reach $1 trillion market cap as a result of the corporation proposing concepts like the robo-taxi. Tesla has been regarded by you as an undervalued AI investment. Could you elaborate on that? It's interesting to note that although Tesla has previously exceeded $1 trillion market capitalization, ARK Invest estimates that mainly as a result of artificial intelligence and autonomy, its fair valuation may approach $8 trillion in the next 5 years. Elon Musk has predicted that Tesla's market value may reach $25, $30 trillion if the Optimus humanoid robot is developed successfully. Dan also emphasized how important the AI component alone could be to Tesla's price. Focusing on the August 8th robot taxi reveal, one can inquire about the production schedule and the potential release date of these vehicles. Excitement is in the air as Tesla intends to begin production shortly after the reveal. However, thus far, the stock market has not responded significantly. What do you think will happen in the market after this revelation, viewers? Will there be a notable change in Tesla's stock price? Historically, Tesla has been able to surpass expectations in spite of early investor skepticism, as seen by the success of the Model 3 and Model Y. The robo-taxi occurrence, which suggests that autonomy may be close at hand, raises the question of why the market hasn't responded more forcefully to Tesla's audacious step towards an autonomous vehicle-dominated future. But most investors appear happy to watch from the outside, waiting to jump into the fray until these advances show clear financial returns. A somewhat conservative approach. How do you anticipate the market will respond, particularly as the financial effects of Tesla's breakthroughs start to become apparent? It's intriguing since one would assume that investors would adopt more aggressive tactics if they really saw the potential here. Dan Ives stressed that the impending robo-taxi event might be the most momentous day in Tesla's history, possibly paving the way for a significant advancement in autonomous driving technology as well as robo-taxis. Dan makes an important forecast that highlights a strong conviction in Tesla's future trajectory. He believes that the stock of the company might double in the next 12 to 18 months. Despite their harshness, the layoffs seem to be a calculated decision to simplify operations in the face of declining demand worldwide, particularly from vital countries like China. Expectations may be low as we shift our focus to the next quarter, but these adjustments may set the stage for major advantages down the road. Even if Tesla is enduring what may be called a Category 5 hurricane, there is a tangible feeling that a Cinderella tale is about to emerge, one that might revitalize the company, especially with its AI ambitions. Let's change our focus and examine the possible obstacles that could arise when Tesla's robot taxi is introduced. It is generally known that Tesla has a history of generating a lot of excitement surrounding the introduction of new products. This approach has proven beneficial and detrimental to the business. Among the most notable instances is the introduction of the Cybertruck, which attracted a lot of media interest and public curiosity despite some unanticipated incidents during its window durability test. This trend of increased excitement may create a difficult environment for the launch of the robot taxi. On the one hand, the hype promotes consumer excitement and investor interest, both of which are essential for the uptake of new technologies. However, it increases the stakes for Tesla to fulfill its commitments. Customer trust may be damaged and disappointment may result if the robo-taxi falls short of the high standards that the company's aggressive marketing has set. Furthermore, the difficulty lies not only in fulfilling expectations, but also in bringing them into line with the practical limits of existing technology. Despite tremendous technological and regulatory obstacles, autonomous driving technology is still developing quickly, which could make it difficult to introduce and operate robot taxis. Critical considerations that Tesla must carefully negotiate include safety requirements, governmental approval, and public acceptance of driverless vehicles. The operational and logistical difficulties of deploying a fleet of autonomous cars are another factor to take into account. These include infrastructure requirements such as maintenance facilities and charging stations, as well as software upgrades and cybersecurity safeguards necessary for the vehicle's safe operation. Taking these factors into account, the excitement surrounding Tesla's latest releases is good for drawing attention, but it needs to be controlled to make sure it doesn't surpass the real advancement and readiness of the technology, a fine balance that Tesla has had to maintain on a number of occasions, and that will be closely watched with the introduction of the robotaxi. Finally, in the midst of our in-depth analysis of Tesla's advancements, it's critical to take the dynamics of the electric vehicle market into account. Ferrari's high-end electric sports car, which will be released next year and costs $500,000, is a significant step towards the company's move into the electrified future of automotive perfection. This development reflects the industry-wide trend towards sustainable mobility options and highlights the growing competitiveness in the luxury EV segment. It will be interesting to observe how the entry of conventional luxury automakers such as Ferrari influences consumer preferences and market trends as they adjust to this new electric landscape. Benedetto Vigna, the CEO of Ferrari, recently spoke with CNBC's Robert Frank on the company's strategic approach in this changing industry and the future of electric vehicles. Vigna expressed confidence in the migration to electric vehicles, pointing out that he expects a sizable portion of current Ferrari owners to switch to electric models as more consumers get a chance to experience the company's electric models. His comments highlight a wider pattern in which venerable high-performance companies such as Ferrari are adjusting to the electric revolution.